So, can we start? Good morning, Vanchana. Am I audible? I hope I'm audible, Vanchana. Yes, sir. What happened? Yes. Okay. Now, in last class, in the last sessions rather, we started with variance analysis to find out what are the difference between budgeted and actual numbers. After doing variance analysis, next thing that we did was what? Responsibility centers to fix responsibility about cost, revenues, profits, or investments upon particular centers. Then we moved on to transfer pricing and we tried to understand when you are transferring goods between one department to another department, how are you going to transfer them and how will you account for pricing? Now, the last thing that we have is performance measurement, right? Yesterday, I think we started with some performance metrics. Yes or no? Yes or no? What all metrics did we do yesterday in topic 1? We did business profitability analytics. Then we did product profitability analytics. And we did what else? Customer profitability analytics. Great. Now, today we're going to look at the next topic. ROIs, ROAs, right? All of that. Now, I have covered some of it yesterday, but since a few of you were not there, I'll just quickly repeat it till the rest of the class joins us. Right? Now, when it comes to returns, right? The way we see it, whenever you're looking at measuring your profitability, there are two things. One is you have return on investment, then you have something called as residual income. Now, in return on investment, you're going to see the word return. What does return refer to? What does return refer to? Give me a minute. And you're in code. Yeah. Now, the word return refers to what? Profits. Right? So, if I'm talking about return on something, that something becomes a denominator. So, whenever you're looking to put this into a formula, right? Return always will be your numerator. On whatever it is will become your denominator. So, if I say return on investment, returns divided by investment. If I say return on assets, returns divided by assets. If I say return on equity, returns divided by equity. Return on sales, returns divided by sales. Return on fixed assets, return divided by fixed assets. Return on total assets, returns divided by total assets. Are we clear on this? Able to follow? Right. This is how you are going to measure returns. So now a very common metric that we have in your normal life is something called as return on investment. So returns is nothing but profit divided by investment into 100. That is going to give you returns as a percentage of your investment. Similarly, you have something called as residual income. Residual income says after subtracting the minimum required profit, whatever is left out, that is called residual income. Meaning, if I had 10 crores, right? Option number 1, I can go put in the safest option, which is FD, right? Or option number 2, I can start a business with it. If I put that money in FD today, in India, I get somewhere around 7% rate of interest. So if I put 10 crore in an FD, I will get 70 lakhs as interest minimum. But instead of putting it in FD, if I start a business with it, let's assume that I start some tea shop or whatever, and with that 10 crore, I'm able to make a profit of 2 crore, right? So how much profit did I make? 2 crores. How much was I supposed to make from FD? 70 lakhs. So what is the excess profit that I've got? 1.3 crore. How? 2 crore profit minus 70 lakhs minimum guarantee. That extra 2 crore, whatever you've got, that is called residual income. Are we clear on this? Able to follow? Great. Now, when it comes to measures of profitability, we have return on investment, which we've done, right? Then we have something called as return on assets, which I told you is nothing but profit divided by net assets, right? And then you have return on equity, which is return divided by or profit divided by equity. Now we have something called as a dew point model formula, right? Which is this. Okay. Now, how do you calculate net profit? Guys, how do you calculate net profit? Profit divided by sales. How do you calculate return on assets? Asset turnover. Now, one more thing. We have turnover ratios, right? Now, turnover ratios, we've done a lot of turnover ratios, and I told you whenever turnover ratios come up, right? The first thing that should come to your brain is what? Sales, because turnover is always related to sales. Yes or no? So if they say asset turnover, that means what? Somewhere in the formula, assets are involved, somewhere in the formula, sales are involved, right? And for turnover ratios, 99.99% of the times, the sales is going to be a numerator. Because sales is going to be numerator, what is the other word going to be? Denominator. So if I say asset turnover, it is going to be what? Sales divided by assets. If I say fixed asset turnover, then it will be sales divided by fixed assets. If I say this one, what is that? Receivables turnover ratio. Receivables turnover ratio you have studied, right? Or you will be studying in part 2, right? There's something called as the receivables turnover ratio or accounts receivable turnover ratio. Have you studied it in college? Yes, no, yes. What is the formula? Cost of goods sold by accounts receivable. COGS or average sales? Average what? Average sales, sorry, sales divided by average debtors. Yes or no? What? Just give me 1 minute. Yeah. See, understand one thing. Whenever you have a turnover ratio, right, there is a sales part and then there is the whatever is the other part, right? Sales is always going to be a numerator. This is fixed. Denominator will keep changing based on what turnover you're looking at, right? So if you're looking at fixed asset turnover, it will become fixed assets. If you're looking at this one, total assets turnover, it will become total assets. If you look at average receivables turnover, right? Average receivables on the numerator you'll have sales or average sales, sorry, average sales only, total sales, and down you'll have average account receivables, right? There are only two formulas that I can think of off the top of my head where the numerator itself will change. One is your payables turnover, and the second one is your inventory turnover. Right. Sir, why is that these two formulas? Because they have nothing to do with sales. When I say payables, payables is my purchases or my sales? Payables is purchases or sales? Payables. Who do you pay to? The people from whom you have purchased goods. Yes or no? So by default, what will come on top? Cost of goods sold. And down you will get what? Average account payables. Sir, why are we writing average account payables? Because understand one thing. This is a income statement item. This is a balance sheet item. This is for 12 months. This is as on 1 day. You can't compare 12 months of sales with 1 day of receivables. Therefore, what do? You take average, opening plus closing divided by 2. That will convert it into 1 year average. Are we clear? Similarly, I have something called as inventory turnover ratio. Again, nothing to do with sales. Inventory talks about my closing stock. So down, I will have what? Average inventory. Why? Because this is again a balance sheet item. And on top, I'll have what? COGS. This is a P&L item, this is 1 day. Sorry, this is 12 months and this is 1 day. So how do I fix it? Using the word average. Are we clear? So whenever you see the word turnover, the only thing that should come to your mind is sales. So if the question says asset turnover, what will you think of? Sales divided by total assets. Then you have financial leverage. Financial leverage is nothing but assets divided by equity, right? Any other formula of calculating operating leverage, finance leverage, combined leverage? Have you studied OL, FL, CL? Yes, no? Yes, no? No? BCom? Huh? Second PU studied. Which college you went to, ma? These people are not studied. You are correct. Huh? BCom it is there, I know. It is there in PU also, it is there in BCom also. For operating leverage, the formula is operating leverage, the formula is what? Someone tell me. EBIT divided by EBT, or is it EBT by EBIT? Which one is it? Contribution divided by EBIT. For financial leverage, it is EBIT divided by EBT. And combined leverage is equal to contribution divided by EBT. Why? Because EBIT will get cancelled out. Yes or no? You can use that formula for leverage, or you can use this formula, which is nothing but assets divided by equity. Total assets divided by total equity. So when I multiply this net profit into asset turnover into financial leverage, right? Sales gets cancelled. Assets get cancelled. What is left over? Net income divided by equity. So dew point model says what? Dew point model says if you multiply your return on assets with your financial leverage, you will get dew point model. Or you can just take net income divided by equity. Extended dew point model is not a part of your syllabus. Don't worry about it. Okay, it just basically checks what is the tax burden on the company. How do you calculate that? You take your this one net income divided by pre-tax income. What do you mean by net income and pre-tax income? Net income is the income after paying taxes, and pre-tax income is EBIT, earnings before EBT, earnings before tax. So earnings after tax divided by earnings before tax will tell you what is the percentage of burden. That's all. Right? Interest burden, again it is your pre-tax income divided by EBIT. Extended dew point model is not tested in the exam, so you don't have to worry about it. Then we have residual income. Like I told you, residual income is nothing but sales minus variable cost. That will give you what? Contribution minus fixed cost will give you what? Operating income. Operating income minus the minimum rate of return or opportunity cost, if you consider that, whatever dollar value is left is called a residual income. Yesterday we've done this, right? We'll do it again. So basically what happens, like I told you in the example earlier, you can take your money and put it in FD, or you can take your money and put it into business. If you put it into business, you will earn profit. So whatever the profit that you're earning from business minus what is the minimum interest that you would have got by putting money in fixed deposit or whatever, that difference is called residual income. Are we clear? Now, what is the difference between ROI and RI? First thing is ROI is a percentage and RI is a dollar value, right? Then ROI is going to tell you what is the percentage returns, and RI will tell you what is the dollar value returns. ROI is going to be compared against your minimum rate of return. Meaning, if I tell you that FD gives me 4% rate of interest and business gives me 3% rate of return, where will you tell me to invest money? FD is giving 4%, business is giving 3%. Where will I invest? Huh? Why FD? You're getting 1% more. Simple as that. Yes or no? If I tell you FD is giving 4% and business is giving 10%, then why? You're getting better returns. If I tell you FD and interest business both are giving me only 4%, why? It is safer and there is less headache. Simple as that. When both of them are giving me same returns, you are not concerned. right? If you have the time, you will go for business. If you don't have time, you'll sit and put the money in FD. Yes or no? Able to follow? Sorry. So your RI will just help you compare percentage wise, whereas residual income will tell you dollar wise what is the final amount. That is what they told you. See, it can be measured against the hurdle rate and measured by the management. Here, it will just tell you whether you should invest in the project or not because the residual income is positive. Because the number that you're getting is positive, you will decide, should I go for the investment? Yes or no. That's all. If you remember your NPV analysis that you would have done, even if there is 1 rupee positive NPV, we will invest in the business. Something like that. Even if there is 1 rupee positive, residual income, we might invest in the business, but that might not be the good business because you will not get minimum rate of return. A business could give you positive income, but if your FD is giving 4% and business is giving 3%, under this I will tell you that I am getting a 3% returns, and here I will tell you I am getting $300 returns. I've invested $10,000, right? This is giving me 3% in business, and I'm getting a $300, whereas my FD is giving me 4%. Under residual income, you'll say $300 positive, go for the business. But only when you look at ROI, you'll say no, 3% is less than 4%. Let's not go for the business. Are we clear on that? Able to follow? Understood? Now, there are some things which are obviously going to affect the profitability. First thing is revenue and expense recognition, right? When do you recognize revenue is going to be a problem? If you recognize revenue today, right, then you will have good amount of sales today, and then your profit will be high. But if you don't recognize revenue today, that's a problem. When you recognize expenses, also is a problem. That is the reason we have something called as IFRS standard, and even in US GAAP, you have something called as what? Accounting Standard Codification, ASC, for revenue recognition. I can see you people looking at my face beautifully. Go open section A. In section A, you studied a topic called revenue recognition, 5-point model. Do you remember? ಸ್ವಲ್ಪ open ಮಾಡಿ. New admission. In section A, we have something called as 5-point model of revenue recognition, which is the same as IFRS standards. One of the disadvantages of being in my class, I will start relating. I will teach section C. I will start talking about section E randomly, section A randomly. Not a good teacher. Siktama, which is the page number? Tell me. I'll also open. Huh? 167. It's like 71. Where is it? Where is it? Where is it? See here, revenue recognition, identifying contract with customers. Whatever you have studied over here, this will become applicable over there. Okay. So how do you measure and recognize revenue? That becomes a question. Second thing, inventory measurement. For this also you have an accounting standard codification. I think AC 330 or 330. AC 330 on inventory measurement. How many measurement techniques are there for inventory? How many methods are there? FIFO, LIFO, SAM, WAM. SAM is what? Simple average method. WAM is weighted average. So you have FIFO method of accounting. You have LIFO method of accounting. If you use FIFO versus LIFO, there's going to be inventory measurement issues. All of that will be causing problems in your profitability. If I remember correctly, I remember sometime during when I was teaching you section D, I remember telling you people to go look at US oil company accounting. Did I tell you? Yes or no? Yes, no? Yes, no? How many of you bothered? No. Understand, guys, understand. I am not giving you extra reading material for my benefit. I am giving it for your benefit. I would not care less. I can come teach the textbook and go. You will understand the things much better. So when you use LIFO accounting, what happens is you are able to show closing stock at a lower value. Because you're able to show closing stock at a lower value, you're able to reduce your GP. If your GP reduces, what happens to profit? Profit also reduces. And if profit reduces, what happens to taxes? Lower the profit, lower the taxes. That is the reason IFRS has completely deemed LIFO method of accounting illegal. There's only one country in the planet which allows for LIFO accounting, and that beautiful country is United States of America. Because they want to manipulate the profitability. All the companies which are doing oil, crude oil export and import, right, based out of the Middle East, their accounting for inventory for crude oil is conducted on a LIFO accounting basis. Why? So they can avoid the tax liabilities. Please go ahead and read those articles. It will help you out understanding things much better. That is why inventory measurement becomes an issue. Are we clear? Then sometimes you might have joint assets, and when you're sharing joint assets, disclosure of those joint assets becomes another issue. Why? Because I will say it is my asset, you will say it is your asset, and whose asset is it? Example, whenever you have a joint venture, right? We had a beautiful joint venture in India called Maruti and Suzuki. Maruti will say, I brought Indian customers by bringing Indianness to the brand. Suzuki will say, I brought customers by bringing good quality car to the brand. Right? Whose asset is what? That becomes a question. Are we clear? Next thing is what? Overall asset management. How do you manage your assets also becomes a big question. Right? Are you keeping tangible assets? Are you keeping intangible assets? How do you manage those assets? How do you depreciate those assets? How do you amortize those intangibles? All of that becomes a question. Right? Are you sitting on assets, or are you actually using those assets? For example, I don't know if I remember telling this to you, but I'll just repeat myself. Right? The first company which came up with your digital cameras was Kodak back in 1975. Right? But then they realized Kodak used to sell photo film. Right? And they realized that if we launch a digital camera today, people will stop buying photographic film. And that's why they never launched a what? They never launched a digital camera. And then what happened because of that? Nikon came in, Nikon brought the designs, Nikon launched the digital camera. Today, Kodak is liquidated. Kodak does not exist. It used to be the biggest provider of photographic film. Today, that company is liquidated. Why? Because you did not manage your intangible assets properly. Another example, if I tell you, how many of you remember? I mean, I don't even remember if you guys know about this. You were probably much younger than school kids, right? There used to be a phone brand called BlackBerry. I don't know if you know about it, but if you have Netflix, you can watch. There's a movie called BlackBerry only. You can watch the whole series. I mean, sorry, the whole story of the brand called BlackBerry. Now, BlackBerry was a phone which was used by Obama, right? Even Obama used to use BlackBerry. Nobody bothered with iPhones back in the day, including myself. Even I had a BlackBerry, right? Corporate people, all of us had BlackBerries. The reason why we had BlackBerry was because BlackBerry had one beautiful feature called BBM, BlackBerry Messenger, right? I don't even know if you guys have heard of it, right? But there was something called as the BBM, BlackBerry Messenger. That was the main asset of BlackBerry. Now, what was this messenger? This was basically a chat app like your WhatsApp or whatever, but you had to add people. You had to give something called as a BBM pin. Only when you had somebody's BBM pin, you could message them. So you could have their number, but you would not be able to talk to them unless and until you had their BlackBerry pin, right? It was, I don't know, something like your Telegram. I think you guys have, yeah, Telegram is there, but in Telegram also you have the option if you have somebody's number, you can message them on Telegram or WhatsApp. But in this, without their BBM pin, you could not message them, and it was an end-to-end encrypted messaging application. Now, in the year 2013-14 somewhere, BlackBerry decided it was a genius idea. They thought earlier this app was only available on exclusive BlackBerry phones only, nothing else. So if you wanted to talk to somebody on a BlackBerry, you had to have that BBM pin. Insane level of security, insane level of privacy. BlackBerry decided, let's make this an Android application and let's launch it on Google Play Store. Every Tom, Dick, and Harry who had Android ended up downloading this. And then they started getting people's BBM pin and they started messaging. And that is when BlackBerry lost its value. Why? Because now nobody was interested in buying a BlackBerry phone. Why? Because I could buy an Android phone and install BBM on it. BlackBerry killed their entire market, and today BlackBerry is a closed company again. Companies, sometimes by holding technology, you can kill yourself. Sometimes by releasing your technology also, you can kill yourself. Because why will I buy a BlackBerry phone paying 30,000 when I can buy an Android phone for 5,000 and I can install BBM on it? Simple. That was a thought process. That is how things work. That is why your asset management becomes very important for your profitability. Next thing that you have is capitalization policies. Now, what do you mean by capitalization? Right? I am assuming that you guys have studied in section A something called as capitalization of interest and borrowing costs. Yes or no? No. Great. So, to come back to it, basically what happens is whenever you take a loan, right? Page here somewhere. Okay, great. Whenever you take a loan, understand, especially for construction, there comes a major challenge with that construction loan. You know what? Let's assume that I took a 5-year loan. I took a loan on 1st of January 2023, right, to construct an office building, right? And the office building construction got completed on 30th of September 2025, right? And that loan is going to be repaid after 10 years, which is 31st December 2032. Are we clear on this? 10-year loan. Yes or no? Now, assuming that the loan is for 1 crore at the rate of interest of 5%. So, what is my yearly interest? 1 crore at the rate of 5%. What is my annual interest? 5 lakhs. 1 crore into 5% is nothing but 5 lakhs. Yes or no? Now, where should interest on loan? Where does that come? Does it come in balance sheet or P&L? Interest expense comes in P&L account or balance sheet? Interest expense, do you write it in balance sheet or P&L? Where do you write it? Sorry? Interest. You have earnings before interest and taxes minus interest. Yes or no? So interest comes in balance sheet or P&L? Balance sheet or P&L? P&L. Pakka? Guarantee on that? So my 5 lakh of interest technically should come in income statement. Yes sir, no sir. But there's also one more criteria called matching concept in your accounting. Yes or no? Matching concept says you have to match the incomes and the expenses for an accounting period. Now my question to you, during this period, during the construction period, did you have any income? Income was zero. But did you have a loan? Yes. Did you pay interest on the loan? Yes. Was there expense? Yes. If you show expense in your P&L, you're not following matching concept. You are not following matching concept. Your accounting is wrong then. Yes or no? So that is why this is called something called as a pre-construction period. The period before the completion of the construction. And during this time, banker will not leave you. Banker will not say, oh, your construction is going on, don't pay interest. Do you think banker will say that? Definitely not. Banker will come and catch you from day one itself. So what is the interest cost? So year 1, 5 lakh, right? Year 2, another 5 lakhs. For the year 2023, you will have 5 lakh. For the year 2024, you will have another 5 lakh. But for the year 2025, how many months are there? Only up till September. Yes or no? So that means what? 9 out of 12 months? How much is that? 3.75 lakhs, I believe. 5 lakh into 9 months divided by 12 months. How much is that? Correct? All of this will be added to the cost of building. So if my building has costed me 1 crore, I will add 5 lakh, 5 lakh and 3.75 lakh. That means what? 13 lakh 75,000 will be added to the cost of building. This is called capitalization of interest. And here from the year 2025 onwards, right? Or for the year 2025 onwards, 1.25 lakh will go to my income statement, and after that every year 5 lakh will go to income statement up to the year 2032. Are we clear? So this capitalization of interest is how much? 13 lakh 75,000. Why is that being capitalized? Because at that point of time I had expense being incurred, but I did not have any revenues to match with that. So when you, or how you capitalize your assets, that also becomes a very important aspect in understanding the value of total assets. Because if you took a bank loan to construct an office building, right? If you took a bank loan to construct office building, sorry, during construction period, whatever interest is there, that will be added to the value of the asset. And because it is added to the value of the asset, total asset will go up. Instead of being 1 crore, it will become 1 crore 13 lakh 75,000. Why? Because interest got capitalized. But if you take the loan, if you don't take the loan, if you are able to build the asset with your own money, what will be the value of the asset? Only 1 crore. Why? Because there is no interest cost to be capitalized. Able to follow? Similarly, your R&D also happens, right? When you're doing research, all of that research and development cost is an expense. But the day you're able to prove that I have an idea which is profitable and from this I can generate income, then that will become an asset for you. How many of you remember the movie called 3 Idiots? Yes, no? Do you know what is Rancho's concept in that movie? I will make a inverter which is running on water. Which version did you watch? Tamil? He said, I will make an inverter which is going to run on a car battery when people come for weddings. Yes or no? Yes or no? He makes the inverter also. That is why you have a whole scene where he's carrying around virus inverter, and Kareena Kapoor meets him and he throws her watch something. Right? He hides her watch and says, oh, this lady lost her watch. That time it is concept. That time whatever you spend in building that model, that cost is called development cost, research cost. That will be going to P&L account. Why? Because that inverter is still not working. So whatever you spend on building that prototype model, that cost is called development cost. But at the end of the movie, with the same concept, he's able to deliver a baby. Now, is that proof of concept proven or not proven? Proven. The minute you've proven it, the minute the design is working, can I say now that I can start mass production of the design? That day, that design will become the technical knowledge of the design, the technical design, what is that? Blueprint of that particular inverter will become an intangible asset. So what do you capitalize? That becomes the question. Are we clear? Because not everything can be capitalized. You have to prove that by doing this, I'm able to generate profit. Otherwise, everything is just research cost. Are we clear? Next, use of full costing. What kind of costing method you use also is going to determine your net profits, right? If you use costing model and if you use accounting model, profits will be different. Example, if you have your own building, can you charge rent to yourself? If you are doing business in your own building, can you charge rent to yourself in your P&L account? Can you say rent paid to myself? Why not? Huh? What? Nothing personal about it. I am a business. I am taking a, give you an example. Success Pro is an academy. I am Akshay, or let's say Naveen. Naveen is the owner, individual. Success Pro is an academy. On paper, LLC, limited liability company, or whatever, right? So can LLC have an agreement with Naveen saying that I will pay you rent? No. Why? Because at the end of the day, for tax purposes, we'll see that both of them are the same person. So it does not make sense. You will not pay rent to yourself under accounting. Accounting does not allow for you to pay for yourself. Otherwise, you'll start paying insane amount of rent to yourself and start reducing your profits. Then everybody will start buying buildings and say, no, my rental cost that I pay to myself is so much. Crores of rupees. Yes or no? Allowed, not allowed? That is the reason it is not allowed. But if you look at cost accounting, in cost accounting, we have something called as notional costs. What do you mean by notional cost? Cost which is not actual, but rather which is assumed. Had I taken a building on rent, what would be my rental? Had I taken labor, what would have been my labor? Opportunity cost. That is allowed in cost accounting, because of which you will have a difference. Are we clear? Yes or no? These are the reasons why your profitability metrics can be changed. Next is something called as balance scorecard. It's a very beautiful concept, I would say. Now, what is this balance scorecard concept? Balance scorecard basically divides the business into 4 aspects, right? Now, what are those 4 aspects? One, is your financial aspect. 2 is your internal business process aspect. 3 is your customer satisfaction aspect, and 4 is your learning and development aspect. Right? Finance, internal business process, customer satisfaction, and learning and development. Every business has to do something or the other in all the 4 things. That is when you will say that you're having overall growth. You have to have a balanced growth. Meaning what? You should have customer satisfaction also. You should have financially, you should be sound also. Then your business process also should be improving. And at the same time, what else? Your company employees also should be learning and growing with you. That is the reason majority of your listed companies or your big companies have something called as an L&D department, learning and development or training department. Why do they have training department? To train their employees on what are the new things which are happening. Are we clear? Able to follow? Okay. So look at this. Instafab Manufacturing builds its business using cost leadership strategy. Okay. The management of Instafab has identified 4 strategic goals. One associated to each classification of critical success factors to help in business. The goals are capture additional market share, maintain low cost, become low price leader, and link strategy with reward and recognition. Right? Help Instafab to design tactic to achieve its strategic goals, define measures it might use, and organize them in a balanced scorecard. So 4 things the company wants to do. What does the company want to do? Read. What does the company want to do? First thing, they want to capture bigger market share. Second thing, what they want to do? They want to what? They want to reduce their cost and also reduce the price. Next, they want to become the cheapest brand in the market. Next, they want to give rewards and recognitions to the employees, to their customers and whatever it is. That's why today you see all your companies are reward points, right? Every time you go to buy groceries, they tell you give your phone number, give this, give that, and then they come up with reward point strategy. Yes or no? Yes or no? Yes or no? That is what they're trying to do. So now what are you going to do? How are you going to take care of this? They're telling you come up with tactics and measures. 1 second. Hi class, I believe that your chat was disabled. Now your chat is enabled. Some of you are messaging me that the chat is disabled. Now it's enabled. Get in closer door. Now, like I told you earlier, there are 4 things, right? Whenever it comes to a balanced scorecard, what are the 4 aspects to a balanced scorecard? Financial perspective, internal business perspective, customer perspective, and learning perspective, right? Now, what could be in the financial perspective? What is your goal? To capture market share. How can you capture market share? By maintaining a customer base or increasing customer base. More your customers, more your market share. Simple as that. Yes or no? Now, how can you do that? Expand your services. Instead of giving 1 product, give 3 products. Instead of giving only this one item, give 3 items. Give different variations. Give different pricing. Yes or no? Example, we look at Xiaomi when it came to India. When Xiaomi came to India, what did they start with? Cheap phones? Yes or no? And then they slowly increased what? They used to give different models, 2GB, 4GB, 8GB model. And then they used to give you options, choose from which kind of variant you want. For every phone, they used to have something called as a base model, Pro and Pro Max. iPhone does that, right? iPhone 6, I don't know, iPhone 17, 17 Pro, Pro Max, right? 1 or 3 models. So that is how you're going to get a customer base. So how do you measure the growth? What is the company growth versus the industry growth? That's the first metric. Second thing, how many units were you able to sell? The volume of sales, number of products sold, number of customers subscribed. YouTubers and Instagram channels. If you follow your favorite YouTubers and Instagrams, they will say, thank you family for 2K, thank you fam for 200K, thank you fam for 400K. What is that? Number of followers. That is a metric. And then number of views per video. Thank you for 1 million views, thank you for 3 million views. What is that? Again, a metric. That is what you want to look at. How much volume is people consuming. Next, percentage of sales from the new product. Whenever you introduce a new product, what is the percentage of sales? Out of your total sales, let's assume that I sold 1 lakh phones. Out of that, how many were iPhone 17 and how many were 16 and how many were 15? That is something that the market is going to check. That is your financial perspective. Are we clear? Able to follow? Next, what do we have? Internal businesses, right? What is your strategy or what is your goal? You want to maintain low cost and low price, right? How can you do that? Keep a consistent production. If you have a consistent production, you're going to have learning curve. The minute you have learning curve, the time taken will come down. Time taken come down. Cost per hour also will come down. Yes or no? What else is there? Improve your distribution efficiency. How can you improve your distribution efficiency? Tie up with Blinkit, Zepto, whatever. Distribute the product better. That is why you see today, majority of the people have something or the other, some connection with either Swiggy, Zomato, Instamart, Blinkit, the Dunzo, whatever it is. Yes or no? They say we are available on whatever store you want. You can order from us. Yes. How are you going to measure these things, right? You check your cost versus competitor cost. If the competitor is making cheaper, are you in a low cost model? If your competitor is cheaper than you, are you in a low cost model? No. So you have to check how the your cost versus competitor's cost. Next thing is first pass rate. What do you mean by first pass rate? How many of your products are passing inspection the first time itself? How many defects are you having? You should have more defects or less defects? Less defects. Last one is percentage of perfect orders. How many orders of that are executed without any problem to the customer? Zomato, Swiggy, you'll order, right? How many times have you had problems? Probably not. Amazon, you'll order something, box piece only you get. How many times have you have problems? That is your what? Percentage of perfect orders. This customer I ordered 30 meals in the month. Out of them, how many times has he complained? If they have complained 1 time, 2 times, 3 times, they're going to check. Are we clear? Next is customer perspective. What is the customer perspective? They want to become a low price leader, meaning what? They want to make the phone as cheap as possible. How are you going to measure that? Check your phone price versus competitor price, right? What else can you do? You can anticipate the customer's needs, and by that, when you anticipate the customer's need, you can make the product before the customer can demand it. And when you can make the product before the customer can demand it, what will happen? You will automatically make a cheap product. Example, any of your phone or laptop companies, right? For example, this laptop which I'm using has something called as a co-pilot button, right? I press the button, it opens the AI interface for me, right? Now my question to you, is that necessary? No. But have they integrated a button just to open ChatGPT? Yes. Does it help me? Definitely, to a certain extent. I'm not saying it does not, right? But only when they're able to anticipate this, they're able to manufacture it. I can always go to Google, open ChatGPT and do it. But then by having a button, it makes my life easier. Yes or no? Yes. That is your anticipation. Next, obviously, you have to increase customer satisfaction. How can you increase customer satisfaction? Take customer service. Ask them, what do you like, what do you not like? Right? And based on whatever customer feedback is given, actually make changes in the product. One company which is very famous for that is Nothing. They take a lot of customer feedback, and whenever customer gives a feedback, they will immediately implement those changes. That's how good they are, right? Your regular shops or your, I mean, I'm sure you have some regular pani puri or bhel puri guy that you go to on a regular basis, right? If you have been going to them on a regular basis and you've told them, I want this particular, level of spice, or I don't want onions, or I don't want this, I don't want that. You'll have people, right, who are specific about their orders. If you keep going there continuously for a month or 2 months, then next time he sees your face or she sees your face, automatically they know what your order is. Yes or no? That is called customer service and customer satisfaction. Last thing, learning and development, right? This is where human resource comes in, right? So what is the objective that they have? They want to link the strategy with rewards and recognition. That is where you have something called as fixed salary and incentives. What are incentives? If you perform good, I will give you more. If you don't perform well, I will not give you more. So what are the tactics you can do? You can promote an entrepreneurial culture, meaning what? You can promote the employees to take a risk, telling them, I'm giving you incentive if you take a risk automatically. And how are you going to measure it? By checking your annual reports. Are we clear? Now, what kind of questions will come in your exam? You will get financial, you will just be given lines and they'll be asking you, put this into financial perspective, customer perspective, So this one, learning and development perspective or whatever other perspectives, financial perspective. Are we clear? Financial, customer, internal business process, learning and development. 4 perspectives are there. They will give you process, they'll tell you match the following. That's all. Are we clear? Next, we have something called as KPIs. What is KPIs? Key performance indicators. How do you indicate that there is profit? If I tell you my company is profitable, will you believe me? No. But if I tell you my company's GP is 20% and my net profit is 18%, will you believe me? If I tell you my company makes 18% net profit, is it a good thing or a bad thing? Good thing. My industry average is 28%. Everybody else in my industry makes 28 and I make 18. Good thing or a bad thing? You cannot just measure performance just like that. Performance has to be measured against something. If I tell you I scored 70 marks in the exam, good thing or a bad thing? 70 marks. Clearly, I'm using the word. I scored 70 marks in the exam. Good thing or a bad thing? Good thing. Bad thing. What? Average. 70 is good or bad? Pakka. Guarantee in a CMA exam. How much is the CMA exam marks? 500. I got how much? 70 out of 500. Now tell me, good or bad? Good. Very bad. Yes or no? But if I tell you I scored 70 in a BCom exam, how much is the BCom paper for? 70. How much did I score? 70. What is my mark? 100%. Out of out I've got. Yes or no? So now is that a good thing or a great thing? Great thing. So you cannot measure performance without having a comparison. You cannot say something without having full information. Are we clear? If I tell you I reached office today in 45 minutes, good thing, right? But when is it a good thing? When you know that what is the normal time taken. If I tell you I reached office in 45 minutes today, okay, Akshay Sir took 45 minutes. But if I tell you normally the time taken that I need to reach office from my house is 30 minutes, then. But if I tell you normally I need 1.5 hours, then. So to measure or to say whether something is good or bad, you need to have a standard. Yes or no? So KPIs are those standards against which you are going to measure your performance. So if I'm talking about financial metrics, there are standards and you will measure your performance against that. Simple as that. Example, if I'm looking at a loan process, right? Rate of interest on the bank loan, personal loan is 13%. Now, if a banker comes and offers me at 16%, what will I say? Not interested. But if a banker comes and offers me a loan at 11%, what will I say? Very much interested. Yes or no? That is how you're going to check your financial perspective. Next, what do you have? Internal business process. How is your process improving? Number of defects are coming down. Time taken per product is coming down. Number of successful executed orders is going up. Those are the metrics for your measuring of internal process. Right? Next, customer satisfaction. Number of customers coming in is going up. Reviews. All of them are giving 5-star reviews. That is also a good thing. Then what else? Amount of money they spend in your place. That also becomes important. Customer comes to the shop, not important. Customer buys from the shop, very important. 100 people come to Zudio every day. Useful, useless information. Useless information. But 100 people come to Zudio every day. 95% of them buy something and go. Out of those 95 people who buy something and go, at least 60 of them buy minimum 2 products. At least 40 of them buy minimum 4 products. At least 15 of them buy 8 to 9 products. That is good information. That is your customer satisfaction. Are we clear? Next, learning and growth perspective. What do you mean by learning and growth perspective? How is your company learning, or how are your people learning and growing? Right? Number of employees getting certifications is increasing. If you look at any Big Four today, they offer you a part of your salary for getting certifications. They say we will sponsor your CMA. I'm not joking. I'm serious. Right? There are a lot of Big Fours. I know BWC has it. I know Deloitte has it. Right? They literally, if you are an employee on their payroll and if you are willing to sign a 2-year contract, they will pay for your CMA. They will pay for your CMA exams. They'll pay for your IMA membership, everything. That is called learning and development. Right? Then how many people are referring other people to come and join? That also is a learning and development. Why? Because if you have a good work environment, people will refer. Okay, yaar, come and join my company. But if your work environment is bad, they'll say, bro, I'm only planning to leave. You only give me referral somewhere. That also becomes an important thing. Are we clear? So with that, we come to the end of section C. Now, I have two options for you. Option number one is barely been 1 hour since we started, so we can start off with a few problems now. Option number two, we go for a break right now. We'll come back from a very quick break. It is 10:25. What time we'll come back? 10:45. Quickly we come back from a break. We'll start problems right from variance analysis all over again till 12:30, and we'll leave for the day. What do you want to do? Finish problems of this topic, then go for a break, and then come back and revise the entire section C, or break now, then these problems, then section C review. What do you prefer? How many of you want a break right now? 1, 2, 1, 2, 3, 4 people want a break. 3, 2, 4, 6, 7. 7 plus 3, 10. Out of 10 people, 4 people. 40% of the class wants break. That means 60% does not want break. Again, how many of you want a break? Raise your hands, man. 1, 2, 3, 4. 40%. Majority loses. Hey, online people, how many of you need a break? Enjoy together and break only. Okay, guys. Madhumita and Fahad. Okay, cool.